Ladies and gentlemen, this is your watch list for July 31st, 2019, and this arguably could be the most important watch list in the last 11 to 40 years. And if you know, you know, tomorrow is the FOMC, the Federal Reserve Open Market Committee on Interest Rate Decisions. If they cut rates, it's the first time in 11 years. If they don't cut rates, it will be the first time in 40 years where the Fed future pricing on the bond market and future market will be ignored by the Fed, which will cause an upset. Now, we're not going to talk about as much what will, how much will it go down, because we don't know. And that's the thing. The title of this video, the stock market will crash tomorrow. Notice the exclamation point. Notice the question mark. I want to know what you guys think. This is where we need to source information. I got a play of the day for you. We're going to go over the play that I bought today that I'm going to possibly look to get tomorrow. But again, I am hesitant, and I just have overall full-blown expectations for tomorrow, what to look for, and then we're going to go over the plays. So let's keep this short and simple. Drop your thumbs up on the video. Make sure you're subscribed. Make sure you're on the live channel tomorrow in the morning or all throughout the day, or get the stream alerts if you're going to miss it just in case anything happens. And post your watch list below and give your feedback and give a response to what you guys think about the play. It's game time, ladies and gentlemen. This is where traders are made and traders fade. Take a look around the court right now, and you're going to see some people who will make it and some people will not. The best part is which group you fall into is totally up to you. Get excited and get ready. But let's talk about what we need to go over. So the keys for tomorrow. We know what's happening. We have it there. But realistically, there's going to be moves up until the FOMC. You have Apple. They reported. We had AMD. We had EA, FireEye, Molina. We have all the plays. And again, depending on how these movements happen, I'm going to look to take profits on some of those plays. So like the UNH, depending on if it goes up a lot, it responded very good to Molina Health. I want to take some risk off the table. We've talked about it today. The Fed meeting has just been this looming dark cloud because there is this uncertainty despite this certainty in the market. That is the whole paradox of tomorrow. So again, it's going to be exciting. I love all of you guys here. You are here you get to witness history. There's no way around it. Whatever happens tomorrow is historical. So you already are going to profit off of that if you are very, very wise. What happens today, if you have hopefully it's very vivid, because you will get to remember this. This is a key pivotal point in financial markets histories. Your kids are going to read about this in some level of textbook at some moment of time.
At this time, the United States was led by an eccentric president, and he was one of the only presidents who was pressuring the Federal Reserve, and the Federal Reserve decided to make the first cuts in the last decade, and then the Federal Reserve decided to...
You're going to read about it. So that being said, the moves will happen all the way up until 11 a.m., where we usually have the 11 at 11 call. We're not going to do that tomorrow. We're all going to be in the game, but it comes out 11 a.m. Pacific time, 2 p.m. Eastern, and expect moves to carry over. So there is going to be volume. I think the volume will most likely come after. I think it will surge. That's supposed to say surge. That's not how you spell surge. But at the end of the day, that's happening in that last 2 hours of market. There will be a move. The market makers, and in general, even the FOMC, they have open market operations. They will be prepared for this. They've stopped other events of this nature, so be prepared for quick pop locks and drop its. That's what I was going to tell you guys. The pop lock and drop it is very indigenous to this climate after they report. So you'll see the Fed meeting come out, and it's going to make a move, but that won't be the initial move, and you got to be careful for that. But that being said, even after it decides the move it can make, you are very, very prone to get random bounces and pops and drops. And this is all talking intraday. So tomorrow, just be cautious and understand we're going to talk option pricing, how you guys are going to have to manage that. But understand this is a multi-day event. Whatever happens today is going to digest. So don't let your imagination get too crazy. And then also at the same time, you want to stay somewhat near the money, if anything, or if you're going out of the money like we do, you can't just arbitrarily get other stuff unless, like, really, really far out unless there's time. But Again, talk about that on stream and ask me. But what I'm expecting is banks and financial products first. So see any sort of bank stock or even a financial product. XLF is a good one. I want to look into those and making plays on those tomorrow. But even gold and commodities and anything related in that sense. And we're going to talk about those. We're going to bring up some of those plays and then watch the value stocks and growth stocks to see if there's a risk off event. And that's why the value stocks are going to be important, because if they start to sell off, it's going to give us an indication into what's going on. So moving along, this is the play that I made today, the play of the day and the play of the month, because this will take time to develop. TLT September, to be cautious. So I'd rather have more time because TLT takes time to develop, and we've seen this many times. And even after the Fed meetings, and I brought this up last time, there was a Fed meeting here, and it wasn't as of a bearish meeting or a hawkish meeting that would have seemed like TLT would have went up. But even then, it'll usually rise up before, come down, but then give it a few days later, it comes back up. So then sometimes too, unless there's a big pop, you're more likely better off buying in at a later time. So again, it all depends at the scope, but we got in some, and if you have time, that'll at least carry you for the moments if the bond markets start to act crazy. So I went for the September 16th or the August 16th. If you want to feed your YOLO demon, if you're a real sicko, you could go for the August 9th. But I'm going for the Septembers. I already got them today, and then I am going to be looking at August 16th to get tomorrow, just a small amount as well too. And now this is the play I want your guys' feedback on. Let me jump here. I'm going to ask you guys to prove me wrong on this. Let me know I'm going to give you the reasoning why, and please prove me wrong and put this in here. And what I mean by this is I need info. I'm not saying like, yeah, I'm the god, man, I'm the boss. Yeah, prove me wrong, dude. You guys got nothing on me. I'm such a good trader. I have to let everybody know how good of a trader I am. Who cares how much money I make? I just want people to know I'm good. That's not what I mean by this at all. What I'm saying is all answers are helpful. I need more info and more points of view. You guys are awesome. We have a lot of smart people here in different backgrounds, experience levels, people who've been in the market since the 1990s and before that, people who are into it, but they have different fields of experience. And then even you guys who are like, I don't know anything. I want a pony. Sometimes the mind that isn't really affected by any of the outside sources, I'd love to hear it from a raw point of view. So all answers are helpful. Just don't be negative that, I'm not here to, again, like I'm saying, I suck. I'm the worst. I mean, just whatever you want, get it out of the way. You're awesome, dude. Just don't, I'm trying to just get sources in MLA format, and I'm just trying to learn and get better. So yeah. But here's the logic behind the play. If they do cut small, so if they do a quarter point cut, which people are expecting, I think the bonds will go down, because then people will anticipate future cuts, or even they'll say it's a recession or something's bad, and then they're going to rush to the bonds to be able to grab the yields while they're still high if they start pricing in future cuts for September, which we've seen through Japan to the ECB and any of these other, even Mario Draghi said for sure in September, but the whole world so far is waiting, and they are, every single central bank has decided not to cut, and they're waiting even till tomorrow. So that's either a signal that the Fed won't do it or not. And I'll just say it right here, right now, I don't think they're going to cut, and it's a very unpopular opinion. Instead of saying the first time in 11 years, I'm going for the first time in 40. All right, I hope Powell is smart enough. Powell, my man, if you're hearing this, do it for the kids, man, okay? Don't worry about the market. Don't worry about Trump. You already got Matt Guala. You caking out there. If you guys don't know, Powell's balling. So the cult loves you, Powell. But do this for economics, okay? Do this for monetary policy. And that's why I believe he's not going to, because I think he's like that. I don't think the pressure is really going to get to him, because when it looks at the Fed's objectives and goals, none of this makes sense. But thankfully, the market doesn't care what I think, and neither does Powell, and he's probably not watching YouTube financial videos if he's not even listening to Trump. But this is what I'm saying is part of the play, because again, the TLT, it goes up when long-term bonds go down. So that's what I'm saying, that they do a small cut, and that is what people are talking about for tomorrow. They're saying that everyone's expecting the Fed to cut, and they said if it's not half a basis point and it's only a quarter, a small cut, that could disappoint the market and still lead to a decline. I'm saying in general that this is kind of what I think will play out. If they do cut big, I think people are going to still pile into the bonds and bringing them down, because fear of a recession, or fear that, okay, if they're cutting rates, again, think about that. Rates get cut, that means rates are going to go down. They're going to anticipate the same logic that this will either be the first time they could get it, or the last time they could get it at these higher yields, and that rates are going to come down and they're going to get it. Or if they are anticipating any sort of correction or decline, they're going to run into bonds. And again, for those who don't know why we're saying that bonds will go down if people buy them, that's how the yields work. So it's supply and demand. When more people demand bonds, you have to pay for a bond. So the more money they're willing to pay for a bond and the more people trying to get a bond, the price goes up. The total return on investment, the yield, drops and bond yields go down. So again, if bond yields go down, TLT goes up. So that's why we're looking at calls on these. And I will go over the specific strikes and we'll look. I just want to go over the reasoning here. But now I'm also thinking that if they do what I don't think, if they do not cut, people are still going to buy the bonds, because now everyone's going to say, okay, well, for sure, if they're not cutting now, they're going to cut in September. And to anticipate future cuts, they're going to buy the bonds again, anticipating that rates will go lower. Or if the market drops on this reaction, they're going to pile into the bonds out of fear with the market coming down. Or even in general, when you do get a real risk off event, everything sells off, even gold, to a degree, or you will see many assets you really wouldn't expect, everything goes down. So like I'm saying, prove me wrong. Let me know what you think of this analysis, because at the end of that's why I'm thinking this trade, regardless, we're damned if we do, damned if we don't. TLT, I feel like it covers it. I think it's been up here for a reason and held here. However, TLT holding these ranges isn't too safe, especially when it's been doing that all year. But it is kind of ironic, considering it looks just like the SPY. So again, too, this is a 2-year chart. You could see the purple is the S&P, and we could even maybe pull it up to even like a 5-year chart. It wasn't always like this. You know, the rates for some time they've stayed there and they've went with the market, but then they've decoupled from the market, and that's where we're kind of even seeing everything kind of start to converge. So it's going to be interesting to see how these play out, but that is the play that I have there. So let me know what you guys think. And then again, we will probably be acquiring some of these even live tomorrow. So make sure you're there. YouTube.com/the stock market. We're live Monday through Friday, 30 minutes before open. Make sure you guys like the video. But lastly, too, as far as these last points here, I would not be surprised to also see trade news or something important come out prior, which goes back to the first point where there should still be moves up until that decision comes out, and then this could affect it. Or you might see some news come out at the same time, and then this is what could cause those pop, lock, and drops it and random bounces throughout the day. So lastly, the philosophy, the approach, and everything. If you don't get what you want, how will you act? This is going to determine your destiny as a trader, my friends. Do you stay or do you fade? Do you force it or do you accept it? Do you go in without a plan? Do you go in without a plan? Do you blame something or somebody else for your mistake, or do you look at where the error went wrong? So many questions, but keep this in mind. And now this is the last final part. Everybody is waiting for this tomorrow. Everybody's looking to respond. Should I tell you to respond? Yes, to a degree, but not really. Look to what you already know. Look to what we've already, again, write down all of this stuff. I have it written down here. Write down what you think, what you know about how this stuff will expect. Go look at some of the past rate hikes and everything, or interest rate meetings, and see there. But go with what you know and think about the future. Think how this is going to play out in a few days. If you respond too quick, you could end up overpaying. And again, people are going to be tempted to respond quick and fast, and that's what we have to see. That's why it's all about planning here for the future. So think about the future. Think about the money you're going to spend today. Think about the money you'd have left if everything expired worthless. And is that going to leave you for a second wave to deploy your army? And the cycle of time and option prices and IV and what's causing them to go up and down and up and down, how there's this feedback loop. As days expire, stocks get closer, further to the money, and then it's going back and forth, a circular motion all the time. Time is very circular. That's how I look at a clock. We're literally playing options, and the main factor is time. The world is a circle. Do you guys realize how you determine time? What is 1 year? It is literally one revolution around the entire sun. Motion is constantly spinning everything. So it's the same thing with these option prices. That's why you got to see the peaks and the valleys of the circle. Where are you located? Oh man, I'm getting too deep on y'all. So I'll leave it very simple. It's better to be late than wrong, my friends. So let's see what happens tomorrow. Now for the plays, let's go to the TLTs. I grabbed September 145s, and I grabbed 50 of these at 5 cents. So I spent like $250 on them, and they're really, really high out there. The thing I like about TLT, it's lower IV, but as you get further out the money, you'll notice the IV starts to go up. That's because you're paying more money for something less likely that's going to happen. And we even saw as once I bought this live and a lot of people bought these afterwards, you saw the price go up, and that's because of demand. So watch how that's going to play into tomorrow with some of these plays, and use the change close as a good reference for that. But I'm going to look to some closer to the money here with some time, and then I'm also going to look to the August 16th. I wanted the 138s for 4 cents today. The ask went up. I was trying to do a spread on Robinhood, and then you guys started buying them, and then it changed the prices, so I moved away from it. But we're going to see how that plays out tomorrow, if I could do a spread or anything like that. And this is what I said is more risky here. But again, with TLT, I'd be careful. I wouldn't go past a 138 or even a 140 without any time, just because the nature of how it's supposed to move. But who knows? You never know what could happen. But be cautious and understand why these options are so cheap, and why you'll notice the spreads are like the same, and it's so liquid and all over the place. It's because nobody's buying these, and they're not buying them for a reason, because TLT shouldn't move like that. So keep that in mind if you want to be a real sicko. Like we said, the August 9th, I don't even have anything I could even tell you to get on that. Just get close to the money. You want to be able to spend a little bit amount of money to get close, because at the end of the day, we spent like $250 on those plays, on those 50 contracts. If it does go crazy, awesome, we'll make a lot of money. But if not, we lose $250. So there's that, and let's get to the rest of the plays. So now we have FireEye. Well, that one's just showing up here. I wanted to talk about the earnings. They reported tomorrow. I'm going to be looking to take advantage of that earnings strategy we've talked about. But at the end of the day, if FireEye, even the puts, when it's going down and it's only a $13 stock, it's really limited downside. If anything, maybe look for the call, or I'd ignore it, or I'm going to look to play even CrowdStrike as a sympathy. There's EA. EA options are usually expensive, but EA can move a lot. It did pretty decent, but it did move in line with expectations, and the option chain was pricing this movement. So we'll see how some of those options play out tomorrow. There was Paycom. You guys are real sickos on this. I grabbed a YOLO, and it was way out the money for like $15, and then people just started buying it at crazy prices. But this one, again, moved in line as well. And a lot of these, even if they go up, even straight down to Apple, I'm going to be looking for a sell-off. And a lot of people were even expecting that, but Apple had a killer report. It was a lot better than I expected. I was honestly surprised, and even then I would even say it gives more credence to the fact that the Fed might not cut tomorrow. Apple even killed it in China. The areas that they were declining in did very, very good. Both products, services, margins, and even down to the aspects that were supposed to be dying for them that they've pivoted away from, and now they're pivoting to services and wearables and accessories have killed it, while at the same time those declining units in products like iPhones, not as good, but the other ones they still killed it. And again, they made up for it with the price differences. So this was a good report, but be careful. Some of you guys, if you're in those 220s, 225s, this is going to be one of those plays tomorrow in the morning. If Apple could continue up and does good, those 222s, 225s, even the 220s, I don't know how much they're going to be worth tomorrow. Even though they went up a lot, even though the stock went up a lot, you're still going to be out of the money. And that's part of that strategy we're looking to take advantage of where the ones that it goes up, but they're still out of the money, those will still be cheap in the morning if and only if the stock doesn't get up there, but usually it will. So watch out for even a frog play on those, and that's what I'm going to keep my eye out for. And then AMD, total cuck, pricing in a 6% move. It only moved 3. Watch tomorrow, both calls and puts will be down. So that could even leave room the market to react, and be on the lookout for upgrades and downgrades tomorrow. And understand too, things don't always have to, even though if the market goes down or up, there is going to be a few of these earnings names. They might just do their own thing, but watch out for that. And again, those upgrades and downgrades can affect that. And then lastly, there's Molina. They killed it. So I'm going to look at this because, again, healthcare, even in a downward economy, healthcare, biotechs actually are a pretty good thing people rotate to because they are very independent from some of these factors, except for policy. We do got the Democratic debate, but markets have kind of stopped reacting too much unless there's something crazy or one of the leaders says something, but we'll see. But watch UNH as well too. Like I said, if UNH benefits off this and we're doing good despite what happens, that's what's going to suck. If we come in with fear and sell out and the Fed meeting isn't that bad, there's going to be a potential for a lot of things to go up there. So we'll see. And then I'm also going to be watching now Starbucks. I like this a lot. I want to play this after the Fed or coming into later this week or even next week, but it's sold off now. It didn't do the continuation as we expected, but I think after it sells off, I want to see where it gets support, but don't underestimate the beast in this guy. So I like that. I love McDonald's too. It's now really dropping, but watch this too. Again, if you see how the value stocks respond tomorrow, they could tell us a lot. But it went down to 211, the 212s, the 215s or 217s were really cheap. The 215s can be cheap. That's why I want to push it to the wall, give it more time to decay, and see where it's at, or see if we could even snipe something for next week. So keep your eye out for that. Make those call outs. UPS, they killed it, and you could watch FedEx too at the same time. I want to see how transport's perform, and if it could continue this trend. I want to look into next week if there's a decay in the morning or anything like that, or it could be one of those flips there in the morning or something that even holds up despite. And then Shopify, they got their earnings Thursday tomorrow morning, the morning after tomorrow, and I still like them. I haven't averaged down. We got murdered on those calls still, but I'm going to be waiting and seeing to see kind of what makes sense and analyzing the response from the Fed and then going in from there. And then lastly, CrowdStrike. I sold out of this one. Remember, we bought it. It was up at like 150. It dropped down to 20 cents, and now it went back up to 150 today. I got out of it. We brought the account back up a little bit. You guys see I was trying to spell indigenous. There's my Australian friend. He was trying to figure it out. You know what I'm saying? But come on, Robinhood. I think Robinhood is down, but that's not working for me. Let me know what you guys think. But, that 150, it's going to allow me to hold those other plays we declined on and still now be positive on the year and get all the money back in the account and still be holding $500 something cash out of like 700. So I'll take it. And that's what it was. I like CrowdStrike, and I think I want to buy it at a cheaper price. It's performing good. Remember, post earnings at these highs, and that could be a good rotational one. It just moves a lot. That's the scary part. So I'm going to keep my eyes out for it. Hopefully, if we could get a buyback, we'll even see how it is in the morning too. But overall, I still like it, but I did sell out of that one. And that's it for that. And then lastly, watch your TLTs. You could watch Restoration. That one we said to keep an eye out for, but this one's going to be a multi-day slower mover. But again, watch. We have to see how the Fed's determine. But Netflix and Amazon, I want to watch how these react, especially Amazon being at this crucial level. And these are, growth stocks. You want to see, do people put on a risk-off event, or now being beat down? If the Fed has positive news and it brings the market up, there's going to be some cheap weeklies on this, believe it or not. We might be able to hit something pretty big with Amazon for a small amount of money. So I like that. And then lastly, GLD. I don't like GDX. I don't like any of the ETFs of it. If you want, don't play the miners. They could still go down, but like I even said, GLD could still decline, but it all depends what happens here. But GLD, it's edging up. It kind of looks like TLT in its own way. Operates a little different, but it's more of a financial product in a weird way, and I like those. So I'm going to be looking out for those. I don't have any plays identified yet, and that's the thing. I'm going to be scanning for all of these tomorrow morning to see what happens and to see how everything goes in. So, ladies and gentlemen, that is it. I hope you're ready. I hope I see you in the morning, and I hope you get your watch list and some feedback so we can source that information. Let's go!